So let's really quickly look at the balance sheets of 4 big companies: Facebook, Twitter, Walmart, and Tesla. And if you go to Yahoo Finance and you enter the name of any public company, you should be able to see their balance sheet. Just go here and there where it says balance sheet, and you'll see a balance sheet for the last 3 fiscal years. In the case of Facebook, starting at 2012 all the way to 2014. And as I showed you before, you'll have 3 main areas here: assets, liabilities, and equity. Assets is what you own, what you owe; liabilities, and what you're really worth here, what the company is really worth here. So at this moment, what the company is really worth, Facebook, according to this, is a lot of money. So we have about 36 billion bucks. If you add 36 billion and 4 billion bucks, you get 40 billion bucks. You can see here that holds true. Assets is liabilities plus equity. And same for Twitter. If you were to do the same addition, you get the same. And Walmart, the same thing. You can see here. These numbers are they're actually, all the numbers are in thousands. So when you see here 203 million, it's actually 203 billion. These are some of the largest companies in the world. Tesla, one of my favorite companies. You can see here the value of their shares is really high. Also, an interesting fact here is that this is NASDAQ real-time price. So as you can see, it updates itself every few seconds, goes up and down. And if you're into trading, stock trading, well, it's a whole science behind it. I'm not really into it, but it can be extremely time-consuming. But there's people that just look at these numbers. They want to make sure that they buy shares when they're low in price, and they sell them when they're higher, and they make a profit. It's a very simple and stupid way of making money. Most people lose money if they don't know what they're doing. It works a little bit like gambling, where the people that run the system and really know what's happening, they make money, but that's the minority of the people, and the rest of the world, they most of the time they lose money or they break even. That's the reality of the stock market in a nutshell. And I'm telling you that, not even being an expert, but I can assume, I'm pretty sure that that's how it happens. Here, if we were to actually make sure that this balance out, then what we can do is grab a couple of numbers. Let's say from 2013, from liabilities, we would add this number plus this number, and we should get this number. So if we grab this, in this case, what it looks like 1,700,000 plus so we are adding our liabilities plus our equity, and here are those 2 numbers. We should get 241. So 2,416,000, and that's exactly what we get here. Once we add those 2, liabilities and equity, we get assets. So it holds true. That's how you read a balance sheet for people that are, investing in companies. If you're a stockholder, you want to make sure you can see this statement, this balance sheet, yearly at least, because it will give you a really good idea of the financial situation of the company that you're invested in. Right? And there's other financial statements like income statement and cash flow statements that we can discuss later. If the videos are not done yet, just let me know, because I don't want to get too in-depth in accounting, because it's a very complex topic, and really once you understand the basics of it, the rest you can outsource. Now you have a bigger company, or you're more interested or involved in the financial side of your company, you can always search online, ask your accountant, and learn. And if you have any insights that I missed or any mistakes that I did, please let me know, and I'll make sure that I share the right information. Thanks. Hey, did you enjoy this video? If you want to see more like this, just subscribe here. If you want a free gift, click here. Yeah. Which one is going to be the one?